Hey everyone, before starting the official video for today, I wanted to put out a very important message regarding Hindustan Unilever stock. So I've received a lot of messages, so I thought that I will just take a minute and clarify this. First and foremost, there is no fundamental problem with stocks like Hindustan Unilever or Asian Paints at the moment. This is not a buying and selling recommendation. I'm just trying to tell you that fundamentally nothing is off. If you check the revenues numbers, profit numbers, nothing, absolutely nothing is off there. Second key point, then why is the stock price falling? It is simply because of the fact that people thought that the Russia-Ukraine crisis will blow over very, very quickly, but it has started to get a little bit messy. Now, as a result, what is going to happen is that we are going to have, it's almost given that we are going to have very high inflation in the economy, and because of which even fundamentally good stocks are falling. Should you be buying these stocks? Should you not be buying these stocks? So listen to my commentary on today's video. Hi everyone, welcome to today's video. So if you're tracking the stock market on Wednesday when I'm shooting this video, you would quickly realize that HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank, they have all fallen by a lot. So is this a great buying opportunity? Should you be buying more stocks? And how you can hedge it and why these stocks have fallen. These are some of the prominent points that we are going to discuss on today's video. Super important video from the point of view that if Indian economy has to grow, the banking stocks will have to grow and support that economy. There is a very, very strong relationship between the flow of credit, that is banks, and the performance of the economy. So if you're betting on the Indian economy, bet on banks. That's the simplest strategy of investing in the stock market. And now might be a great time to invest. I will also show you live investment in some of these stocks. So before we get the discussion started, very big shout out to our sponsors for today, which is Jupiter. It's a neo-banking app. These neo-banks work hand in hand with conventional banks to improve the banking experience for customers. Jupiter is an app, you can download it. It would allow you to save, track and spend your money better. And there are a range of functionalities that you can explore. So let's get the discussion started. And first and foremost, let me just quickly take you to the recent performances of these banks. So as I'm shooting this video today, you can see the chart of HDFC Bank, and from its top, it has fallen from roughly 1722 rupees to today 1357 rupees. So this was a big fall. It's approximately 21% fall. It recovered a little bit during the day, and now the total loss stands at 20% from its top. So this is a big fall, 1/5 of the value eroded of a huge dynamic bank like HDFC. Is it time to panic? Hold your horses. We will have that discussion. Let us also check this for ICICI Bank. So if you draw this line, you will see that again, the fall here was roughly 16.5, 17% from its top. And again, you can see this last red candle, and this was the fall today. So this was again a big fall. Why has ICICI fallen less compared to HDFC Bank? If you have been watching my channel, you would already know the answer. So comment below. It would allow me to understand that you're learning something from my videos. If you do a similar analysis for Kotak Bank and other major banks in India, again, they have all fallen. So this does not seem like a bank specific problem. This looks more like an industry specific problem with the banking industry. So you will say, Akshat, this looks very scary. Can you discuss the reasons for the fall and should we be buying these stocks? Okay, let us discuss that. So first and foremost, let's quickly discuss the performance of HDFC Bank. So here you just simply need to take a look at revenues. So revenues have been constantly going up. There is absolutely no problem with the revenues. Same goes for net profits. There is absolutely no problem with the net profits also. It has been constantly rising. No problem again there. If we check the latest results, so let's take a look at the latest results and compare it on yearly and quarterly basis. So quarterly performance has improved, no problem. Year on year, sales performance has improved, again, no problem. So it doesn't seem like a fundamental problem. It's not as if that HDFC Bank or ICICI Bank are not able to perform or people have stopped depositing money or there is something bad that is going on with these banks. It is just that the entire banking industry is suffering for the time being. Why is that? There are three very important reasons. So let me go one by one. So reason number one, the asset side risk of banks has increased. Okay, wow, what does this mean? This sounds super complicated. No, it is not. Just try to understand it by using a simple example. How do banks like HDFC, ICICI make money? They take deposits. You go and deposit your salary. Banks pick this up and they forward this as loan, right? And in the middle, they take some commissions. And that is what the entire business model for bank is. Now, when you're going and depositing your money in a bank, the money that is deposited becomes an asset for the bank because they are using this money, this fodder, to pass it off as loans and they are making money in the process. So right now, the risk of these assets have gone up. You would be surprised. You will say that, I don't see any changes happening. Why is this risk going up? I don't understand. I don't follow. Okay. What happens is there are macroeconomic changes that keep on happening in the world. So you need to understand this by putting the lens from all across the globe. So what happens is that during risky situations or uncertain times, for example, right now there is Russia-Ukraine crisis and no one in the world can guarantee how this crisis might pan out. If Mr. Vladimir Putin go bonkers and he presses the nuclear button, then it's the end of the world. I'm smiling, but it's a very serious issue and it might happen, who knows, right? So no one is sure and this uncertainty is very, very high. For example, India is a risky economy. Why? Because it's an emerging economy. Other emerging economies are also risky. So FII money, it flies from riskier economies to safer economies, not safe economies, safer economies. So safer economies will be economies like Europe, US, etc., which are bigger economies, which have more scale, which have more resilience. So therefore, FII sell stuffs in the emerging economies like India and move that money to safer economies. And as a result, fundamentally good stocks like HDFC Bank also fall. Of course, I can show you the data and prove this point. So take a look at the Feb selling of FIIs, right? Only FIIs, not DIIs, because DIIs keep their money in the Indian market. They have no other option at scale. So we are just looking at FII selling. So tell me when this number of 45,720 crore was greater in any of the other months. So let us just quickly scroll through this column. So you'll see 41,000 crore, 35,000, 39, 25, 2,000, 23,000. Etc. etc. Then there was a lot of buying, 65,000, 42,000, this, that. And suddenly you will see, 65,816. This looks interesting. Okay. And this was which month? This was March 2020. What was the crisis then? It was the COVID crisis. Money flew from emerging economies like India to stable economies like US, Europe, etc. And this number is very well represented. Now, interesting thing is that if you scroll up, you will see that when situation starts improving, this money comes back. It's not as if that this money forever goes away. So the FIIs sold stuff in March of 2020 quite aggressively. Then they ended up purchasing roughly 6-7 months after in November of 2020. Now, it's not as if that this money is forever gone, but yes, due to this excessive selling, there is short-term pain in the market. What can you do as an investor? Not much. You cannot, number one, predict the crisis or the extent of that crisis. Number two, you and I are Indian citizens. If we are transferring money outside India in excessive amount, we have to pay like a lot of surcharge also on it. So we don't have that flexibility of withdrawing our money to some other economy. We by default are invested in the Indian economy and we have to trust it. There is just no other option. I will tell you some hedging options towards the end of the video, but primarily money is tied up in the Indian economy. And if something bad happens in India, of course, our money will take a lot of it as normal retail investors. Important point to note is that you and I can't do much and we should not panic because FIIs are selling. They sell and then they come back also. So don't worry about that. It's okay. See your portfolio in red for a few months maybe. It will become green again if you're purchasing good stocks. Now, the second reason for the fall is the expectation of lingering recovery. What does this mean? So let me go to the Nifty 50 chart and show you what that means. Basically, what happens is that this is the 2020 crash. This is the 2022 crash, so to say. Why did the markets crash here? Because there was COVID and no one could have approximated till what point this COVID situation might last back in March of 2022. So there are expectations. Some will say that, okay, it will recover in like 6 months. Some will say that, it might take 6 years. And some will say that, Xi Jinping is a crazy guy. He will act like bats again and he will spread like another wave and whatnot. So there is just no consensus there. But people have a certain expectation when this crisis will get over. So in 2022, when we were entering this 2022 phase, somewhere here, this part of the equation, people were imagining what? People were imagining that, markets have already given a lot of run up. There will be sideways movement that will happen, and it started happening. Then unfortunately, a big correction came in the form of Russia-Ukraine crisis, lot of panic. And now the expectations are that, the markets are going to move in this sideways movement for a much longer time because Russia has somewhat destabilized the world, so to say. So the expectation of recovery has gotten elongated and it is reflecting in stocks. Should you panic as a normal investor? The answer is no. Should you panic if you are a trader? Maybe. But if you're an investor, please don't panic sell. It's a good time to buy from that perspective. Can markets fall further? Of course, it can fall further. No doubt about that. But whenever the market gives a breakout and the recovery starts on an upward trending trajectory, all the stocks that you're purchasing now will become green. Don't worry about that. Let's move on to third and final reason for the fall, that finance stocks, especially now, especially banks, are going to correct a lot more because finance stocks have a high beta and they correct more compared to other sectors. A classic case in point is the Bajaj Finance stock. For example, if you take a look at 2020 crisis, Bajaj Finance was trading at its top at roughly 5,000. It fell all the way to 2,000. So it got corrected by almost 60%. But did the markets fall by 60% or the Nifty fell by 60%? The answer is no. Nifty did not fall by 60%. Bajaj Finance corrected more because it's a finance and an NBFC stock. So it corrected more because the beta of Bajaj Finance stock is going to be higher. So when you are seeing HDFC Bank 20% loss, 25% loss from the top, it does not mean that this loss is going to be permanent. Now look at the run-up Bajaj Finance has given after the fall. So the point is that finance stocks correct a lot also during correction, and then they grow a lot very, very fast whenever the economy recovers. So you need to be okay seeing this volatility. If you're not okay seeing the volatility, please do not purchase equities, buy bonds or some other investment instruments where volatility is not there. So you should be comfortable seeing volatility. So this brings us to the next section of the video, that what is it that I'm doing? So I'm doing two things. One, I'm purchasing stocks. This is me investing 10 lakh rupees in the stock market today. So these are some of the stocks that I've purchased. Now you might ask me that Akshat, you are buying stocks like Asian Paints also. Can you explain why? So I'm purchasing something like Asian Paints from a hedging perspective. Hedging means that I'm trying to hedge my aggressive portfolio by buying defensive stocks like Asian Paints. Some of these stocks, including Asian Paints that I purchased, were a defensive stock. They are unlikely to fall a lot compared to finance stocks. So therefore I've purchased it as a hedge. I've also done FNO, futures and option, to hedge my entire portfolio. I will not get into the details because FNO is a highly complicated subject. I don't want to outline things as a money-making instrument because honestly, FNO I do for hedging. I do not do FNO to make money. It's a very risky proposition, therefore I don't talk too much about it. But maybe I will make a separate video on this channel talking about the hedging strategies where I can show you how I do futures and option position to hedge my entire portfolio. So this is the first key thing, that I'm hedging my portfolio. Second key thing is that I'm keeping a long-term view in mind regarding banking/finance stocks. What does this mean? So for example, right now, if you think about banks, HDFC Bank, ICICI Bank, these are all leading banks in India. They are available at a discount. Zoom out and think 3 to 5 years ahead, can these banks be replaced? The answer seems like a no. Number two, will these banks grow their business? The answer seems to be yes. Why? Because the flow of credit in India is becoming easier and easier. People are using and buying more and more stuff. There is more consumeristic culture at play. Keep on talking about being conservative with your spending, but a majority of the people will not develop those habits and you will become rich by investing in banks. That's a simple argument there. And also, if we look at the convenience factor, for example, neobanks like Jupiter have made the life of consumers very, very easy. You can do financial planning in a more methodical and convenient way by using applications like Jupiter. So more people will be using these type of applications. These neobanks work with conventional bank and overall their business will grow with time. That is an undisputed fact. The chances of that happening is very, very high and we are playing the probability game in the stock market. No one can guarantee things that HDFC Bank will not fall further or ICICI Bank will not fall further. No one can take those guarantees. But right now seems like a great opportunity to invest. So I'm taking more positions on these banks. I hope you enjoyed the video. Please press the like button and I will see you tomorrow.